Good afternoon, good morning, wherever you are. Welcome and thanks for joining us for our Lunch and Learn webinar. We'll go ahead and get started here. First, we're going to start with a couple housekeeping items. Lynn, if you can switch it to the next screen for me, please. There we go. Okay, so for joining us and attending this webinar, you can earn a CPE credit. In order to be eligible, you need to stay connected to the webcast for the entire program and participating in responding to all three of our polling questions. An email with your instructions to access your certificate should be emailed to you within about 2 to 4 business days. Hopefully, probably no later than by the end of the week. So be on the lookout from those. And we ask that you please complete the course evaluation that will pop up in your screen at the end of the webinar to give us some feedback. And now I will turn it over to Lynn Fountain, and she'll take it away. Go ahead, Lynn.
All right. Thank you and welcome everyone to today's webcast. Today we're kind of continuing on our series of the impact of COVID on accounting. And we would hope that individuals, we would hope by now that COVID is no longer an issue, but it is. We continue to struggle through COVID-19 and accountants are going to continue to have impacts on them. And as we come closer to the end of the year, this is kind of a good time to evaluate and think about your different processes and how they may or may not be impacted by COVID. Over the last several months, we've talked about different impacts related to financial statement disclosures, revenue recognition, lease estimates, or leases and estimates and assumptions, going concern and subsequent events. So we've covered a lot of different areas. This month, we're going to kind of turn our focus to inventory, the valuation side, as well as the physical inventory, and then the impact on goodwill and impairment. So today, what we want to discuss, and I'll spend about 40 minutes going through these items, and then Beth Patrick will give you an overview of their research system that they have that can help you in looking, especially with everything that's going on, maybe looking up information that may be relevant to any particular accounting issue that you have. So here's our agenda. We're going to look at difficulties and alternatives when conducting physical inventory observations. We'll talk about the impacts on inventory valuation and inventory levels. Now, some of you may have inventory, others not, but we'll go through that area. We'll talk about the impact on goodwill and goodwill impairments, and then also the concepts of asset impairments. Asset impairments has been a large issue in regards to COVID, because if you think about it, in the early days of COVID in March 2020, April, May, we had a lot of shutdowns. Now, even though here we are in very late October 2021, and we would have hoped we would be back to some semblance of normal now, COVID has thrown us for a loop, and we have the Delta virus, and now we're having all the concerns with the mandates that are being put out there, whether they're vaccine mandates or mask mandates, and that's impacting companies, and it's impacting the way they operate. And if you have areas where you've had to close down or you can't operate, that may have impacted, your impairment tests. So here I've got the first poll. So I'll turn it over to Sarah. Are you going to talk about the poll? I'll turn it over to Sarah and we'll do the poll.
Sure, I'll just go ahead and leave this open for about a minute or so. Today's first question is, which of today's topics has most significantly impacted your company? Inventory, goodwill, impairment of assets. We'll go ahead and leave that open here just for probably about another 30 seconds. So if you would like to receive a CPE for this attending this webinar, please make sure that you answer the polling question. And Lynn, would you like me to, when I close it out, let you know what the
Yeah,
answers
sure.
are?
That's great.
All right. Looks like a couple more
And
people
we're
are.
doing,
Okay. So it looks like 41% said inventory, 17% goodwill, and 42% impairment of assets.
okay, all right. Well, goodwill or inventory and impairment of assets seems to be the biggest one. So let's talk about inventory. That's our first one. Now, COVID-19, I like to think, as an accountant that, we have these standards and these rules and they're going to apply no matter what happens. And I think most of us probably fell under that assumption even when COVID hit. But COVID caused such a great impact on how companies operate, like right now. Now, this is an inventory, but it does deal at the end product. Our supply chains are so disrupted right now. And so companies are maybe not carrying as much inventory, or maybe they have obsolete inventory. There are all kind of issues with that. So it is a little bit amazing how the COVID pandemic has snuck into elements that accountants have to consider in regards to, could this be an impact? And that's why we said even things like revenue recognition and leases. Yes, we have our standards, but because of things that have happened in the economic environment that have impacted your business, it then impacts this accounting area. So the COVID-19 pandemic may affect inventory in a lot of ways. Shortages of labor. I don't know, we probably have a wide audience of where you're at right now, but I reside in the Midwest, and I know that our companies, some of our larger companies, are really having difficulty maintaining workers or getting workers. And one of the areas that they're having problems with is especially, like we have Amazon. We have a big Amazon warehouse, one of their major hubs, I guess you'd call it, in our city. And I know that they continually are having trouble maintaining staff. Other things might be materials or unplanned factory downtime. With what's happened with COVID, we may have closed down certain facilities and then you open them back up and maybe something wasn't running correctly. And it was an unplanned issue and you had to take it down. Obsolescence is a huge issue on inventory. If you carry inventory, you probably have some element of obsolescence, but it might depend on what type of inventory it is. But if it was stuff that maybe impacts the retail side, maybe like groceries or things like that, that can become obsolete very quickly, it's a problem. But other areas can be impacted just as much. Retailers that carry things like cosmetics or things like that, even software. If retailers have certain types of computers or phones and they've been in the inventory and they're not selling because people aren't buying, that's become a problem. Slow moving inventory, the same issue. People are having trouble with really doing their inventory fulfillment processes because it's so unpredictable out there. Right now, if you listen to our politicians, I guess I'll say, they're saying, if you want a Christmas shop, you better do it now because the chances that you might get things closer to the holiday period is lower because people aren't carrying the inventory. In fact, if you go out in almost any area of the country, and if you maybe want to buy a TV or a computer or maybe even furniture, you may have a 6-month lead time. So that's another issue. And then one of the biggest ones we'll talk about here a little bit deals with accounting and the year-end process. And since a lot of companies will be coming up on year-end, it's your inventory physical counts. how do you do physical counts if maybe a facility is locked down or closed down or only so many people can access it? So due to the length of the pandemic, also a lot of production levels could have been impacted. So one of the things that we have to think about with inventory is we have to determine whether our inventory on hand has been impaired. And if you look at the accounting standard 330, most inventory is going to be measured at lower of cost or one of these two things: market value for inventory that's measured by using the LIFO method, or the retail inventory method, or the net realizable value for all other inventories. So valuation of the inventories is typically subject to your accounting standard 2 inventories. So COVID necessitates your net realizable value calculations using a lot more detailed methods than maybe we have done in the past. You might have potential need to write down stock due to less sales, and maybe it would become obsolete. Interim inventory impairment losses are going to have to be reflected in the interim period that they actually occurred. And then subsequent recoveries on gains have to be recognized as gains in future periods. Also, COVID-19 may have affected the recoverability of some of your inventory balances. So if you're a company that deals in seasonal products, seasonal inventory, or inventory that could maybe expire, you might have to assess for obsolescence reserves. And you may do that already, but you might have to do it on a much more frequent basis because of the length that the COVID pandemic has impacted us. You may have to also assess whether a decline in future estimated selling price of those items may require a write-down in cost of inventory. And in that, what I'm relaying is the fact that they have recognized that to be able to sell some of these older inventory items, people may have to write them down further than what they expected. So you're going to need to analyze that. You may have to reassess the practice for fixed overhead cost absorption if production volumes become abnormally low, and that deals with some of your overhead allocations. So per ASC 330, variable production overheads are allocated, if you're in a manufacturing environment, are going to be allocated to each unit of production on the basis of the actual use of the production facilities. So allocation occurs on expenditures, productions in line with your facilities typically running at normal capacity. Now, some facilities may be running right now at normal capacity, while others aren't. That's the biggest issue that you're going to have to evaluate here. Are your facilities, if you're in a manufacturing type environment, running at normal capacity? So basically, they say do not increase the amount of fixed overhead costs allocated to each inventory item in the event you have issues, and the unallocated fixed overhead costs are recognized in profit or loss in the period that they would be incurred. Besides valuation of inventory that you're going to really need to look at in regards to your organization, and you're going to have to segregate that out maybe into the types of inventory. You may have various inventory warehouses, so some may be impacted more than others. You're going to have to evaluate that out. And like I said, that'll impact your reserves, your obsolescence, maybe your write-downs. I'm sure with the supply chain, some of your availability has been impacted. So your whole ability on your reorder points are impacted. Those are all issues relating to our typical accounting process. But then we run into physical inventory. And we know that at the end of the fiscal year, and since we're coming close to the end of the calendar year, this may apply to a lot of companies, we conduct physical inventories. So we have an issue with the fact that in some cases, management may not be able to conduct a count on the balance sheet day if you're a 12/31 filer or maybe a November 30th filer. because of limitations maybe in your area on the lockdown requirements or the shutdown requirements, or even just social distancing concerns. So you're going to have to consider whether this could impose restrictions on your ability to obtain sufficient audit evidence for your auditors. And also consider whether the possibility that you have to delay the count further to when restrictions are going to be lifted. How could that impact your audit opinion by your auditors? They may have to, if they cannot get in there and in some method, either substantially or analytically validate that inventory, they may have to give a scoped out opinion. So in either of these circumstances, for organizations, you really need to consider making sure your governance bodies are informed of your limitations in regards to conducting your physical inventory. If the physical inventory is conducted on a date that's other than the balance sheet date, then information on changes in the inventory between the count date and the financial statement date are going to be important. So you're going to have to really track that whole process of transactions that may occur between those two different times and be able to reconcile that out and show the proper adjustments. So entities are really going to have to evaluate the effectiveness of their design and their execution of controls over inventory procedures to determine whether a count can be relied on. So if you aren't using a perpetual system, but you're using that hard physical inventory count system at the end of the period, and you can't do it on the dates available, you may really have to evaluate whether your internal control procedures are working properly. And those could have been dramatically impacted because of the people and the restrictions you have on the facilities. Also, you're going to have to think about the availability and the usability of technology. And last year, about mid-year, when we were really in the lockdowns, the AICPA put a white paper out about conducting remote physical inventories. And they were trying to address the topic from the external auditors' concerns. And, one of the things they were saying was, well, technology has helped us through a lot of the pandemic, and it can help us. And it may be a way that you can execute your physical inventory. But you're going to have to understand the technology that's being used and any practical constraints. For instance, if you may have, I don't know, somebody may be using something like a FaceTime or a streaming device. Well, how do you know that that stream isn't being interrupted, or that they put it in a circle or a loop and that you're actually seeing the products as they're being counted? So you're going to have to really look at the controls over that. Ensure security on your technology controls. So you want to make sure the accesses are right. The people that are using it understand the abilities of those controls. If you're performing testing remotely, you're going to need to determine the procedures that provide either similar or the same assurance on inventory can be provided using that technology. Now, inability of an auditor or others to attend the physical counts is one of the constraints that we have because of COVID. In those cases, whether you're an auditor or whether you're the company, you're going to have to ask, can sufficient alternative audit procedures be performed to obtain from the company side sufficient evidence, or are you going to have an audit scope limitation? And some of the things they suggested in regards to can you execute these types of things remotely is vouching purchases and sales to and from your perpetual records, performing any substantive analytical procedures that you may need to do, testing sales and purchases for proper cutoff. How are you going to do that if you're going to do it on a remote basis? And we have all the issues with documents being sent to and from people. How do you know if they're secure? How do you know if they're original? Those types of things. Testing the accuracy of the cutoff period is going to be another challenge, and validating procedures of reconciliation to the general ledger. That's an interesting concept in regards to just all reconciliations. You know, typically with reconciliations, sometimes we can observe them, but that's a little bit harder to do in a remote environment. So how are you going to validate those things? The AICPA did say that if there's a scope limitation, if the auditors don't feel that they can appropriately derive other procedures to give them assurance on these things, this scope limitation could result in modification to the auditor's opinion. All right, so that's a quick overview of inventory. Let's talk a little bit about Goodwill. Now, this was one that was less voted on. I think I have less information here in regards to who might be interested in Goodwill, but there's a lot more entities that may have to test Goodwill, one or more of their reporting units for impairment between annual testing dates. Typically, you have an annual testing date process for your impairment of Goodwills. The accounting standard 350 that deals with that says an entity is required to test Goodwill for impairment at the reporting unit level at least annually, or this is where COVID comes in, between annual tests if an event occurs or circumstances change that would more likely than not reduce the fair value of a reporting unit below its carrying amount. So as we learned about Goodwill in school, you know, you may have purchased a company or merged with a company or something when there's Goodwill on the books. With everything that's happened with COVID, you know, is that Goodwill still stated appropriately? Because if you had to, you know, get rid of it, or is there an impairment? And COVID could have resulted in the need to relook at that. So conditions that they talk about in regards to thinking about a reevaluation of impairment are a deterioration in general economic conditions. We've had that over the past 18 months. Yes, in some areas we've had improvements, but in other areas we still have the issue. A deterioration in the environment in which the entity operates, and that's going to depend very much on your location and where your organization operates. A change in the market for an entity's products or services, and that's definitely an issue that could affect many companies. You know, organizations like Amazon or FedEx probably had a good increase in their desire for, or in their clients' desires to be used. But other companies like restaurants or some retail establishments have had difficulties. In fact, a lot of our big box retail stores have had to close down because everybody has moved more to doing things online. So all of these conditions require a reevaluation of your Goodwill impairment. Another thing, overall financial performance, such as negative or declining cash flows, which we know has occurred because of COVID, or a decline in the actual or planned revenue or earnings compared with the actual and projected results of relevant periods. So a part of your Goodwill impairment analysis is valuation, and the quality can be impacted by the quality of your projections. And it's just like our projections, you know, it's asking us to look into a crystal ball. What do we think is going to happen in the next 3 months within our organization? And that's hard. And the SEC and the FASB, AICPA have all recognized, okay, we understand all these things are hard, but you have to use the facts that you know at the date of the valuation to make that valuation. And one of the most important things for those that you may be interested is documentation. I know we hate that, but you're going to really need to document your assumptions if you're going to make any changes in your valuation. Uncertainty requires companies to really rethink their valuation approach, and forecasting challenges due to past performance indicators that we've had over the last 18 months may not be indicative of future results. Again, we don't know what's going to happen in the future either, right? Yes, the world is hopefully somewhat getting back to normal, But we have a lot of areas of the country that are kind of switching back and forth in regards to lockdowns, mask mandates. There's a lot of issues right now with companies and some that are requiring vaccine mandates and issues that will affect their overall existence. So if the company had cushion in their goodwill, that would be in excess of the reporting unit's fair value over the carrying amount. And if that decreased, then your monitoring needs should have gone up. So companies using scenario-based forecasting approaches are successful in reevaluating their goodwill. You just need to make sure you understand the key drivers of estimates and your reliability of the inputs. And inputs are changing all the time. So again, having that solid foundation and documentation. Inherent uncertainty with key assumptions used in your impairment testing require internal controls, yes, internal controls there, we talk about again, to really be designed and updated. And that's an important component through any of these processes we are talking about. You know, if you have the same internal controls that you had 18 months ago, you might ask yourself, is that relevant? Because, you know, how has our organization changed in the way they've worked? So internal controls have to be designed and updated to ensure that quality data is available. All right, my last topic, and according to my clock, I have about 15 minutes, so I'm good, is asset impairment testing. So impairment testing and accounting, that's an accounting procedure to determine if assets are impaired, like if your economic benefits of the assets have drastically increased. And we can relate that a lot to COVID because we may have assets that are sitting in certain factories or warehouses or areas that haven't been used. And because they're there and they haven't been used, they may have some impairment to them. So under GAAP, if the cash value of an asset exceeds the sum of undiscounted expected cash value of an asset, the asset is then considered impaired. So entities are going to need to consider whether conditions exist currently that indicate assets should be tested for impairment. And typically, again, you test on certain intervals for impairment. You may have to test more frequently. And this is one of the things FASB and AICPA has come out with, that especially towards year end, your auditors are going to look at what your testing procedures and assumptions were for asset impairments. So even if assets with just an annual impairment testing requirement, they may have had a triggering event that occurred. So these are some of the triggering events that they indicate that tell you you should reevaluate that asset for potential impairment. Shifts in market forecasts, all right? We have a lot of shifts in what we think will happen in the future because of what's happened with COVID. And that could impact many of your assets that you have recorded on your books. Fluctuations in material or labor costs. And we know that that has happened, especially with all the supply chain issues that the US and globally we're working with. Increases in costs of borrowing. That will be tied a lot to your lenders. And there's been projections out there as to how much that may be impacted in the next 6 to 18 months because of what's going on with the economy. And again, that's a very strong uncertainty. So the component there is just making sure you have strong documentation on the companies that or on the lenders you're working with. Changes in availability of financing. That could have happened because possibly, whoever you got your financing from before is no longer a viable entity. So you're going to have to look at that. Company is experiencing or expecting future net losses in operations. All right, there's another one where they're asking you to look at a crystal ball. And, what do you think is going to happen in the future in regards to our operations? shifts in stock prices if you're publicly traded and you have stock, changes in management or losses of key employees. And I know a lot of companies are having varied issues with employees. When we had the kind of shutdown and then companies were opening back up, a lot of employees kind of said, well, I kind of liked working from home, and some companies had difficulty getting workers to come back to the office. And it's interesting, they talk a lot about right now that a lot of companies are still having trouble filling positions, and the unemployment rate, I think right now, the last time I looked, it was around nationally about 4.2%. But in September, the government in a lot of states, I think it might be state by state, but in a lot of states, the government took away that extra subsidy they were giving for unemployment. And I just read an article yesterday in the Wall Street Journal that compared the states that have taken away that subsidy to the states that have kept that subsidy. And oddly enough, they say that unemployment has not really changed that much. We would have thought that by people not having that subsidy, they would have figured they need to go back to work, but that isn't necessarily happening, at least not right now. And it may still be too early, because in most states that the subsidy was taken away, it was taken away in early September, and we're just in the end of October. But changes in management or in your structure or in your process or losses of the key employees is another triggering event. If you deal with foreign exchange rate, that might be a triggering event. And look at the last bullet there, supply chain shortages. That's definitely a triggering event. And we know that's an issue that is very hot topic right now. So economic conditions caused by COVID may or not be considered a triggering event for your business. You have to evaluate it as it applies to your business. Criteria for a triggering event is met. This is AICPA rules, or this is your accounting standards rules. It's met when it is more likely than not that the asset or the reporting unit's recoverable amount or fair value is less than its book or carrying value. So that's what you have to consider when you're considering whether you really truly have an impairment. If not triggering, if you didn't have a triggering event, didn't occur, you're probably still going to want to analyze the impact the event may have had on your operations. And that last bullet point, as they have told us before, document, document, document. Document the factors that you considered that led to your conclusions of what you evaluated in regard to your asset impairment. You may have your auditors come in and they may make some other assumption, but you need to have documentation regarding the concerns and the assumptions you made. Now, non-financial assets, those are assets that obtain their value from physical traits like real estate or vehicles, use impairment models, and they rely on development of cash value projections. Now, impairments typically will establish that new cost basis for the assets, and they do not permit subsequent reversal of the recorded impairment. So you have to keep that in mind too if you make some recording. So good faith estimates could result in material recorded impairments if you have an unforeseen development that occurs. The recognized impairment may no longer be appropriate, but you can't reverse it. So you have to keep those things in mind when you're going through your impairment. Now, assets are tested typically in a certain order to ensure adjustments are made before including assets in the testing of larger units. And assets that are not held for sale are required to be tested for impairment in this order. First, assets that are outside the scope of ASC 360, other than Goodwill, such as inventory, capitalized costs to obtain or fulfill revenue contracts, and indefinite-lived intangible assets. Then the second one would be long-lived assets in accordance again with ASC 360. And the third one would be then Goodwill in accordance with ASC 350. So those are the order in which you test your impairments. Now, on indefinite-lived intangible assets other than Goodwill, COVID may have resulted in the need for your organization to reevaluate that impairment of that particular asset. An indefinite-lived intangible asset is one where, this is again AICPA definition, there is no foreseeable limit on the period of time over which it is expected to contribute to the cash flows of the reporting entity. So example might be certain brands or trademarks or licenses. Those are common examples. These assets typically are tested annually for impairment. Impairment loss is recognized if the fair value of the asset is equal to the excess of the carrying amount of the intangible asset over its fair value. So a valuation technique that's applied to measurement of a brand or a trademark is the relief from royalty method, is what they called it. So it focuses primarily on expected revenues, royalty rates, and requires fewer type assumptions than other methods. So during the pandemic, again, we know it's challenging to project anything, let alone revenues. Revenues is going to be challenging to protect. So entities are expected to use their best estimate. And that's what you're going to hear on a lot of these things. The SEC, FASB, AICPA are putting guidance out that you're expected to use your best estimate or your best information available at the time. So of all your required business and valuation assumptions for this or any other method you use. Now also you have to consider if there are indicators that an intangible asset classified as an indefinite-lived asset has become what they call finite-lived. So that could occur if the entity changes the expected use of the asset because of what's happened in regards to the COVID-19 pandemic. All right, so that is bringing us very close to the end of my summary issues. We have, as we said, gone quite a bit over the last, I think we started these in maybe June, and we've talked a lot about the accounting implications of COVID. So what we're trying to do here is get an idea of what you might like to hear about in future lunch and learns in this for this type of topic. So our answers here, and then I'll turn it back to Sarah, are, would you like to hear about cybersecurity concerns in our current environment? That's been a huge issue in regards to the mandates for working from home and a lot of just the change to the remote workforce, or the impact of maybe technological innovation on accounting. They're talking a lot about how accountants are really going to have to move more towards understanding artificial intelligence and machine learning and other things like that. Maybe managing a remote workforce. If you're a manager and all of a sudden you're having to manage remotely, that's been a huge shift in what you as a professional have to do. Or this last one is one of the hot topics that are coming out for a lot of companies is environmental, social, and corporate governance. You'll hear it referred to as ESG. So with that, I'm going to turn it back over to Sarah, and she can give you the results of the poll.
Okay, so it looks like the winner was cybersecurity with 43%. Next would be impact of technology innovations at 33%, and then managing a remote workforce was at 16%, and ESG was at 8%.
Okay, great. Well, then it sounds like in November we'll be going over cybersecurity. So with that, I'm going to turn it to Beth.
All right.
Thank you.
Let me switch the screen over to you, Beth.
Okay. That just
Looks good.
all right. All right, great. Yeah, so thank you everybody for joining us again for one of our lunch and learns. I'm Beth Patrick, and I have been working with Accounting Research Manager for over 15 years, so very familiar with how we lay it out. And I like to always share with people a unique perspective that we do with the research service. Of course, here in Accounting Research Manager, we have a keyword search, which will bring everything together for you, but we also have some shortcuts that are here on the home page that can be a big time saver for you. And so what I wanted to talk about today is our topics A to Z that you'll see right here on the accounting library. And we'll also talk about the accounting standards that we've created. So if you're in more of the financial reporting, obviously we have this accounting library here. But just so you know, we do also have our regulatory, which has a similar topic approach. We have the auditing. So if you wanted to see how things are approached from the auditing side, we also have that topics approach. But since we're talking more on the financial side, I'm going to focus on that today. And so like Lynn was sharing with us some of the standard information like on 350. And when you go into the FASB, I'm going to start there and then compare it to how we present it. Because I'm sure most of you are all familiar with the way the codification is laid out. And when you go into it, you know, it just has all of these different sections, but it's not always that user friendly as far as, you know, what your topic may be or what you would have a question about. So watch as I just toggle right here to the ARM accounting standard. So this is just our way of taking the accounting standard and presenting it in a different format for our users to locate information. Now, if there is anything specific for COVID-19, we do have a link here for our users and a quick overview. I'm going to scroll through that. But what I want you to see is that we do organize the standard in the same order here, but just giving you those topics instead of, you know, just having to understand exactly where you wanted to go. Then once you see a topic that you want to research, you can actually just click on any of the US flags next to the topic, and that will give you all of the information for that particular topic. Here's disclosure, which is always a hot topic. But if I just click on one of these, and I just clicked into the US flag, what our team will do is we will first start off with a summary. If there have been some changes that we want to catch your eye on, you'll see this blue editor's note. We'll keep this up here for both public and private, and then once it's been effective for all entities, then we would, you know, take that away. But it's just a nice way to see that there is a change. But one, we always will start off with the summary. The summary is a nice area just to read the basic information with what we call that plain English. Here again, the editorial team will make sure you know if it's effective before the adoption of a certain ASU, or if I scroll down, we'll see after that. But again, you'll see these easy bullet points to help you understand that. And so here, you know, again, after the adoption. So first off, we always start off with that summary, but as I scroll down, and I'm just kind of scrolling pretty quickly today, but after that, we would always link you to the authoritative literature. We want you to make sure you see things that are from the SEC, from the FASB itself. So I can just follow these links right here to take me directly to that authoritative material. So we've cross-referenced the codification here for you. If there are any illustrations, you know, sometimes those things get buried when you do a keyword search. That's the benefit of coming in topically like this. Our professional services group has already pulled this together to make sure you see that these examples are provided from the FASB themselves. Then after that, we'll check the AICPA. You know, do they have any information that might be applicable here? And the last thing on the page would be our interpretation. So there's a lot of information, but when you think about in a typical environment, if you're just doing a keyword search on your own, having to look at the SEC, the FASB, the AICPA, then look for the interpretations. All of that is pulled together here for you on this one page. And that's really just to ensure that you aren't missing anything. We definitely want to mitigate that risk of you missing something that would be important for your research. We also want to make sure this is productive. Having somebody prepare all of this information for you is meant to make your research more efficient. So let me just go ahead and I'm going to scroll back up and we'll click into like a FASB related item first. Another unique thing that we do for our customers is what we call a color-coded flag. We want to make sure that you, your staff, know exactly what you're reading. So as you move through the service, you'll see these color-coded flags letting you know this is authoritative whenever it's gray, and then we will let you know the source, so the FASB here. So as a user, you could go through, read this information, and then if you wanted to get back to our guidance, remember you can just hit the back button and we have all of those interpretations linked for you as well. And any page that we put together will have this color-coded flag letting you know it's interpretive and it's from us, Accounting Research Manager. So after that, after I read through the ASC, if I wanted to go into the guide, obviously I could do that. Or if I wanted to take a deeper dive into our interpretations that we have, I have a lot of examples that I could go in and look at. And then let's go back to the home page. So that was just, I was using 350 because Lynn was talking about that. But what about when you don't know that standard number? You can go in topically. And this is probably when I talk to our customers, the area that they like the most. They like that it gets their staff involved in the research. And when you look at this, it has the most common research topics. So as a user, you can come in, and I will do this first typically if I'm talking to a customer and they throw out a question, I'll just come right in here and look that topic up. So I'll just go ahead, let's just click on impairment. You know, where do I start for that? I'm not exactly sure. Well, this is one that is in a lot of different standards depending on the situation. So our editors are linking me to those different areas that it could be. You know, is it this in this 350? Or in this 320. So depending on your situation, you could just follow that link. So I'll go ahead and just follow another one here, but it'll be exactly that same type of page that I was just highlighting before. This one's a little bit smaller. You have a quick summary. You have that SEC and the FASB together. This is a good example where, you know, here it is cross-referenced. You can find some information on this in 350, but you could also, there's something referenced in the 360 ASC as well. Again, making sure you're not missing something, and then we would have our interpretation. So if you don't know the number, it's not a problem. You can just go right in topically, and when you know the number, go in through the standards. And then one of the other things that has been really helpful with our customers is a tool that we have called the 10K lookup. This allows you to go out and look at what other companies are doing. Even if you are a private company or you are a CPA firm, you can use this to look at what are public companies using to disclose some of this information, especially around COVID. You can just type in your keyword, and then you could tell us what industry is most applicable. So if I just even type in the word impairment or impairment evaluation, you can type in that phrase, and then you could search the form. We can search all forms, Ks, Qs, SEC comment letters. We can also search Ks and Qs together. So I'll just do Ks and Qs. And then the benefit here is your industry. So pick your industry, or like I said, if you're a CPA firm, pick the type of client that you're working with. And I'll just pick this as an example, and we'll run the search. So this will really hone in on those specific companies and that particular industry. And it's really quick. It found 197. All the companies are probably going to have this word in their filing. But what's going to be nice about this is once you click into any of these companies, it's not going to take you to the entire filing and you have to look for that word. You can see here that it's taking me and showing me the pages that we found that particular word. And then all you have to do is just click on the one that you want to read, and it'll take you right to that page. It highlights the word that you're looking for, so it's easy on the eye just to quickly read through that. And then, you know, if you wanted to jump to the next page or another section, it's very easy to kind of go back and forth and look for that word. So when you think about any word that you wish you could find an example disclosure on, or how other companies are handling that, this is a very simple way to do that. Now, just one more thing here on the 10K lookup, a common question that I get is, you know what, I don't want to search the whole 10K. Maybe you just want to search a certain section of the 10K. We also have that ability right here, the last filter on the screen. So if you knew you only wanted to search like part 2, item 8, just turn on that filter and it'll just hone in on that particular section of the filing for you. Or exhibits, I get that one as well a lot. Okay. So the last thing too here on that I wanted to highlight is just keeping you up to date with these changes. We do have a whole section here on current developments. Lower on the screen, we have all of our COVID-19 resources. So as things come out, we will post it here in this tile. But anytime there's something new, we will email our customers about it, and we'll have that daily update and a weekly summary that we send you. But we'll also write white papers. So if you wanted to see something, like I know we have something on the ESG that we were talking about, crypto, we will have easy to read kind of 10-page PDF that you could get up to speed before you need to take a deeper dive. And then we also will have a checklist for you. So if you wanted just to run a quick checklist on all of the new accounting changes, you'll just pick accounting, or if it was AACPA, and we would run a report for you in Excel. And since we have just another minute, I'll go ahead and open this up. Did I pick? Yep. And we'll put it in Excel. We do have the what's new section in a paragraph format as well, so you could just read through that. But a lot of our customers, we know that you're in Excel. Sometimes when I talk to our customers, they say they track all of the changes in Excel. Well, within our service, this can save you time because our editorial group has already done that for you. So this will have all of the latest ASUs, it'll have links to them, and then we'll give you a quick summary about them. So like I said, the most recent ASU, when it was issued, a link to the guidance, what's the title of it, when will it be effective, if early application is permitted, our comments from our team over here about what this update is about. So I know there's a lot of changes going on, just one less thing to do with Accounting Research Manager. We want to help you manage that type of, all of those types of changes that are coming in. So with that said, why don't we go ahead and go to our last polling question.
Okay. Thank you, Beth. That was great. And also Lynn, thank you. Lynn, did you have anything that you wanted to add or before we close this out?
No, I don't have anything. I always love Beth's presentations. I think it's very, very helpful, but I don't have anything and I don't see any questions.
Okay, perfect. I'll go ahead and leave this poll open for a couple more seconds. And just a reminder, if you did fill out, if you did participate in answer all 3 polling questions, you should be receiving an email from CPE Link with instructions on how to access your certificates. You'll usually receive them between 2 to 4 business days. And I want to thank everyone for joining and have a great afternoon. Thank you.